let's shift focus and welcome on the show this evening Aashish Somaiyaa, who is a Managing Director and CEO of Motilal Oswal Asset Management Company, and he joins in right here to chat with us. Aashish, good evening. Thank you so much for taking time out for us. First, let's talk about what can be said about this market, especially in the backdrop that the fact is that even if FIIs may be turning their back on India, domestic inflows clearly are the backbone for this market today.
Yeah, definitely I would see it continuing because I am seeing it as a trend change. I am not seeing it as a short-term response to market movements. I am seeing it as a trend change, because we are seeing a generational shift. I mean, a few years back, our biggest competition was the government of India, because the government of India used to pay 11% tax-free and risk-free on their bonds. And now what we are seeing is that the risk-free, there's nothing called tax-free, and the risk-free rates are down to about 6%. When I started my career, my parents advised me that, go to the state bank, go to a post office, open a PPF account and you'll get 11-12%. That's how we started saving originally before I came into the market. But nowadays I meet a lot of youngsters, when they start earning, they open SIPs. So it's a generational shift.
Aashish, in light of how the last 2-3 years have been for Indian markets, flat to negative, a couple of funds, including yours, may have juiced out 8, 9, 10% return, but others generally have not really performed a whole lot. Do you think next 1 year could be on the same lines, or there could be some returns to be made, or as most believe it could be challenging the 2017 for Indian equities?
So very quickly on what has happened in the past year or couple of years, and then I'll come to your question on the futuristic view. So first is that, if you see 2016, the Nifty didn't do too much. And it's been the same in the last 2 years and the last 3 years. We've seen the Nifty perpetually between 8 and 9,000 kind of levels. But I would just request all the audiences, to cast a glance once at the mid-cap index and the small-cap index, because a lot of money in the industry is in these so-called hybrid, diversified, multi-cap kind of funds, which have a fair dose of mid-caps in it. So while Nifty hasn't done too much, the small and mid-cap index has been a fabulous source of outperformance for investors at large. That is one. And secondly, even in 2016, while Nifty didn't do too much, a well-managed fund has managed to do about 10-12% in terms of the annual return. So that's where it is. I would just request the audiences, not to form their perception of performance based on what the Nifty has done really. Now, going the next 1 year, I think it's going to be, first 3 to 6 months are going to be seriously eventful. Because we are getting into the result season now shortly, and then there is budget, and then there are elections in 5 states, and then you'll always have to keep an eye on the US. Long story short, my sense is that while first 2-3 months will be volatile, but I think January, towards the end of January, third week January is going to be a fabulous entry point, and I don't think post March, April there is anything to really look back.
Right. Aashish, if we were to look at issues a little more near term in nature, say December quarter results, which will provide direction for the market, what are your thoughts? Some say that it's going to be a terrible quarter for corporate India. Others say that perhaps the adjustments would cushion the blow, and this quarter may not be as bad as market may have factored in. Which side of the fence are you on?
I think if you see in the last quarter, about 45 to 50 days were quite fabulous. And for a variety of reasons which we have heard of, there has been in fact a preponement of demand. So my own belief is that October, November, December may not be that bad really, except for say maybe banks which have seen huge amount of distraction on the business front. So I don't think October, November, December will be the worst. I would be more careful making any prognosis actually about Jan, Feb, March, because that would see the full-blown effect of slowdown and demonetization. But by the time Jan, Feb, March results come, the market will be heavily focused on what's happening in the budget and then the state elections. So I don't think we'll ever see the full impact of market, worrying about quarterly results.
Right, Aashish, since you've been alluding to elections, let's talk about that a little bit. 5 state elections, dates today being announced. Let's talk about UP, for example. How do you see that sort of playing out? Is it going to be advantage BJP? Is that something that, the market is perhaps pricing in as well?
So, whether we like it or not, the market always worries that, if the government faces any political setback, then they will be actually forced to look at more populist measures, and then will they be able to go ahead with the hard reforms or not. I think from the market side, that's the only perspective. And the second perspective that the market would have is, is this government going to find the next election winnable or not? I'm referring to 2019, whether they'll find it winnable or not. So that's the only thing that the market will worry about. And if the government is not able to, if the current BJP as a political party is not able to perform too well on the state elections, it will definitely weigh on the market in terms of what is the outlook for fiscal stability as well as future reforms.
Talking about areas of investment, if you were to pick between large caps and mid caps, and mid caps we know have done incrementally better than what large caps did last year, is that likely a trend to follow? What's looking more attractive to you for 2017?
See, I would say since we are discussing near term, say 1 year kind of perspective, I think investing in large caps or blue chip companies is quite a sitter. Because there is a stark differential as far as valuations are concerned, and there is a series of accidents which have actually hit large caps. Whether you see the crash of oil and commodity complex, or whether you look at series of US FDA interventions with pharma companies, or you look at asset quality review of banks, or variety of issues. For example, the domestic growth has resulted in more growth in mid caps like NBFCs, MFIs, etc. So I think large cap as a space is not only under-owned, it's also relatively undervalued. And my sense is that large caps have a good scope to outperform in the next 1 year.
Ashish, what are your thoughts on the way market trend could be this year? Because last 1 year has been, horrible for momentum traders. It's been very difficult to fathom which side to trade on because it's been very volatile. Do you think the 2017 also, because of the events which are lined up, could be some sort of a very volatile year?
See, it would be volatile because of news flow. We've already kind of enunciated that there are a couple of quarterly results which will be watched keenly. You'll have election results, you have the US to watch out for, and of course you have the budget. A lot of expectations from this budget because it's the fourth one actually. So my sense is that market will be volatile. First 6 months, you'll be seeing many days where the market is up 2% or down 2%. But I think volatility has become part of life, and I have seen that our investors have really matured. Overall, Indians are under-owned as far as equity is concerned, and every sign of a fall, I have only seen more money coming in. We also need to keep in mind that other asset classes are relatively unattractive. Interest rates are very low, and after the pronouncements of the last 45-50 days, owning or buying too much real estate or buying too much gold is not very cool anymore. It's quite untenable actually. So my sense is, yes, volatility is part of life, but anybody with a 18-month, 24-month perspective also can expect pretty good returns coming forward.
Right, Aashish, we'll leave it at that. Thank you so much for taking time out for us this evening and joining in.
Thank you for calling me.
Thank you so much. Let's move on and talk about the latest as far as the deadlock over the GST goes, and the wait looks like has only gotten longer. The two-day council today met, but the meeting has ended with a whimper. No consensus